Okay, so we're looking at how to post journal entries to the ledgers. All right, how to take the transactions we recorded and put them to our tier accounts or the ledgers. Okay, so I will give an illustration. We are looking at these transactions here. 2023, January 1st, started a business with 205,000 kwacha in cash. So we have to record this journal entry. Okay, so the two accounts that are involved here is the cash and the capital account. Okay, every time you're looking at a transaction, you ask yourself the accounts involved, cash and capital. Then you ask yourself, are they increasing? Are they decreasing? Cash is increasing, capital is also increasing. So according to the double entry rules, cash is an asset. So when an asset is increasing, you debit. So you debit cash 205,000. Capital is a capital account. Increase in capital, you credit 205,000. Now this transaction, we're going to open up the cash account and the capital account. So open up the cash account here. All right. And let me also open up the capital account. So whatever the journal entry is saying, you do it when you're posting to these accounts here. Yeah. So on the journal entry, it said debit cash. So on this, the ledger here, on the debit side, the date you're going to put 1st January. All right. Details, the other account which was in this transaction. So you put capital. Okay, capital was the other account involved in this transaction. Amount 205,000 kwacha. Okay, simple as that. When you go to the capital account, okay, the same thing. On the journal entry, we said credit capital. So we come on the credit side, you're going to say 1st January. On details, you're going to put cash here, credit 205,000 kwacha. Any questions? Okay, then there are two types of accounts whenever you want to close these accounts. At the end of the year, you want to close these accounts. There are temporal accounts and there are permanent accounts. So the way they are closed is different. Okay, a permanent account. Okay, permanent accounts examples are assets, liabilities, capital, drawings. Okay, all these accounts are found in the balance sheet. These accounts, when you're closing them, they'll have a balance to take to the next time period. Okay, they'll have a balance to take to the next time period. Okay, that's for permanent accounts. Now, temporal accounts, them you have to reset them at the end of a period. Okay, you need to reset them back to zero. They won't have a balance taken to the next period. Okay, they have to be set to zero. Any expenses or revenue, these are the temporal accounts. Okay, and they have to be reset to zero, especially at the end of the year. At the end of the year, they need to be reset to zero. So let me illustrate how you close a permanent account. Okay, cash and capital here. Let me illustrate how we close them. And then I'll show you also how we close temporal accounts. Okay. So, for example, okay, if let me say we had some other figures here. Okay, let's say maybe 4,000. and 1000. Okay, then here we have 5000. Okay, want to close this account, want to take the balance to the next period or to the next year. The first thing you need to do is you need to get the total for the debit side. Okay, and you need to get the total for the credit side. Okay, so the total for the debit side it's 210,000. Okay, we've just added this 205,000 plus 5,000, 210,000. Total for the credit side 4,000 plus 1,000, 5,000. Okay, get the total for the debit and credit. Then you are going to see which one has got the higher amount. In this case, the debit side has the higher amount. So you put the amount, the total here, 210,000 at the bottom of the debit side and here at the bottom of the credit side. So colleagues, when we're closing these accounts, it's just a matter of subtracting debit from credit or credit from debit. Okay, that's all that's happening here. When closing, you have to either subtract debit from credit or vice versa. Now, in this case, since the debit is the higher amount, so we're subtracting debit minus credit. Okay, so you go to the side which has the low amount. The credit side has the low amount. Okay, so you're going to put 31st December at the end of the year. Okay, 31st December. Okay, you write balance carried down. Okay, in other books you see there's a column which has got an F which is written as folio. That column you can also put this amount there. Okay, but even like this in an exam, if you're answering any question, just put it like this, you'll still be okay. Yes. So balance carried down, we're just subtracting the total debit minus the total credit, all right, on the balance carried down part. So you're going to say 210,000 total debit minus 5,000 total credit. You get 205,000 here. Then you go the next period, all right, you're going to say the 1st of January. You're going to say balance brought down, BD, balance brought down. So this same amount which was here, you just bring it on the opposite side, 210,000. Okay. So meaning this is the cash balance that you've began with at the beginning of 2024, since these figures were for 2023. So for 2024, this is the balance, the opening balance for the cash account. Any questions? Okay, let me illustrate another example. Could you just mute your mic? Okay, now let's say, for example, the capital account. Okay, maybe let's say we have another amount here, 4,000, 3,000. Okay, want to close the capital account. All right. Again, you're going to say which one has got the higher side, debit or credit? We say the debit side, 205,000. Okay. Credit side, 205,000. Debit side, 7,000. We just added 4 plus 3,000. Debit side, 7,000. So you say which one has got the higher amount? It's the credit side. So you put 205,000 on both sides. 205,000. Okay. Yes. Once you've determined the higher amount. Then on the debit side, since the debit side is the lower side, okay, it's got 7,000. So it's the lower side. So you're going to write 31st December, okay, balance carried down, okay. The balance carried down should always be in the lower side, okay, and this side is the debit side. So balance carried down, okay, we're going to subtract now. We're going to say credit minus debit, okay. This time here it's now credit minus debit. Now, previous example, it was debit minus credit. So say 205,000 minus 7,000, we get 198,000. Okay. Then the next period, you're going to say 1st January 2024. Balance brought down. We're going to put 198,000 here. 198,000. So in 2024, the capital balance will be 198,000. Any questions before I show you how to now close a temporal account, an account which needs to be set to zero? Okay, let's see. Let me look for a transaction with a temporal account. Mm-hmm. Oh, the numbers outside. Yes, the numbers outside. I'm just illustrating for you. When in your, if you're answering a question where you're told to make an account like this, these numbers you don't, yeah, you don't really need to show them outside like this. Okay. Yes, you just calculate. You take note of the number. Okay. Then you do your subtractions to see. Okay. So let me say, yeah, transaction three. Bought goods for cash 105,000. Okay. So here, the two accounts involved are purchases account, which is an expense account, and the cash account, which is an asset account. Whenever you incur an expense, increase in an expense, you debit. Cash is an asset. You are paying for these goods, so the your cash account is dropping. So reduction in an asset, you credit. Okay, so we debit purchases and credit cash. Okay, this transaction here, right? So now we want to post this to the ledgers. Okay, so since here I just want to illustrate how to close a temporal account, let's just we'll focus only on the purchases expense account. Okay, so as I said, temporal accounts need to be reset to zero, which is be okay. Let's say this is the purchases expense account. Okay. So according to our journal entry there, we say we debit purchases. Okay. So when you're doing this exercise, colleagues, what you just follow what the journal entry has said. Debit purchases. So on the purchases account, you put the amount on the debit side. Okay. Then credit cash on the cash account, you put on the credit side. So debit. So here we're going to say 3rd January details. You put the other account which was involved in this transaction. You put cash here. The amount was 100,500 kwacha. Okay. Yes. Then at the end of the year, when you want to reset this account to zero, here there's no balance carried down, balance brought down. Okay, with a temporal account, there's no balance carried down or balance brought down. Okay, so to set this account to zero, you need to credit. Okay, first you put the amount here, 100,500 kwacha, 100,500. Okay, yes. So to set this account to zero, you just credit the same amount here. Okay, so on the credit side, you put this same amount, 105,000 kwacha. Okay, 105,000 kwacha. Okay, on details here, you're going to put the statement of profit or loss. Whenever you see this PL, it just means statement of profit or loss. Okay, the statement of profit or loss, if it's shown as a T account, this credit entry will be offset with a debit entry in that statement of profit or loss. Okay, yes. So this is how you close a temporal account. You just credit 105,000 minus 105,000, zero. The purchases account has been set to zero, and the next year you start it up again. Any questions? Mhm. Here I'm just doing it for illustration's sake. There in this same exercise, there were more purchases, there were more amounts. Okay, but what you notice, yeah, if you have you you just have amounts on the debit side. Okay, so you still total. Let's say if there was a 4,000 here, maybe here there's a 3,000. Okay, if that was the case, you just get the total first. 107,500. Okay. Yes. Then to make this go to zero, you just credit the same amount, 100,000, 107,500. Okay. And you have set it down back to zero. Okay. Yes. Then, for example, another account, another temporal account, purchases returns. Purchases returns is a contra expense account. Okay, it reduces the expense account. Okay, that's what don't call it. Hello. Let me just call you. I'm just recording. Where were we at? Yes, purchases returns. Okay, purchases returns. Yes, purchases returns. It reduces the purchases expense. Okay, purchase returns whenever you take back goods to your supply. Okay, so for example, if this was the purchases returns account, we'll have entries on the credit side. Okay, since it's a contra expense, so you might have amounts, let's say on the credit side, Maybe let's say John, this is a supplier we returned to 5,000. Mark, another supplier we returned to 7,000. Okay. At the end of the year, you want to set this account to zero. This is now the purchases returns account, right? You just get the total 5,000 plus 7,000, 12,000. You put the amount on both sides, 12,000, 12,000. So to reset this account to zero, okay, on the debit side, you now come on the debit side, you debit the statement of profit or loss, all right, and you put the amount here, 12,000, okay, so that you reset this account back to zero. Any questions? So with temporal accounts, there's no balance brought down, okay, no balance is brought down, but with permanent accounts, they'll have a balance brought down.